Hello everybody, today is Wednesday the 15th of September 2010, and for now this will be the only way I'll be able to put anything up on YouTube, as the normal computer that I've been using right now is in the shop getting fixed. And I turned on an interesting little article today from the MSN.ca webpage, and the headline was "Household Debt Reaching Worrying Levels." And the headline below the headline states, "Canadians are taking on too much debt, with potentially serious consequences for both their own finances and the Canadian economy." The link for it will be in the more information box, but the warning from economy people, and a leading global think tank comes amid fresh evidence that floor low interest rates the past 2 years have induced households to borrow more than they may be able Let me re-say that. The warning from economists and a leading global think tank comes amid fresh evidence that floor low interest rates the past 2 years have induced households to borrow more than they may be able to comfortably afford. Very interesting. I guess it's been problems that these poor people have been borrowing money because they don't have much. I guess they should just suck it up and just live their life in misery for not becoming an amazing capitalistic person. And I'm just saying this sarcastically, or somewhat sarcastically. And in reality, it's what I've been talking about for quite some time, how debt is guaranteed, because of the monopoly within central banks. Within the United States, it's the Federal Reserve. Within Canada, it's the Bank of Canada. These debt issues are guaranteed. Well, if you are interested in understanding more, I recommend the video Zeitgeist Addendum, the first 30 minutes of that video, along with Zeitgeist Federal Reserve. You can do a Google search. I'll put the link also in the more information box. That will explain the debt issues a little bit, because you're not going to hear this information from the mainstream media, no. And I'm thinking that the writer of this article, and it's Julian Beltrami, I've most likely pronounced that wrong, well, Julian probably has no idea that this debt is guaranteed, because I don't know what education you have, what university or college you went to, but I can make a calculated, safe guess that they most likely didn't teach you the debt situation and how it is guaranteed within the current monetary system. And I seen a video today where one person was stating, well, you know what, I really feel that we've seen this bad stuff, and I believe that I see how the worst is over. And I have to agree with the person in that he feels that the worst is over, because when you are pounded and pounded and pounded with all of this economic recovery propaganda that we are hearing on all of these newscasts, CNBC, well, all of these business channels, when you listen to the radio and you hear the economy or the economists talking on there about this law or the slow, fragile recovery, all these articles, they all talk about the recovery, and you want to believe them. At least I think many people do, so they thus believe the economic recovery. That's why I feel that they're going to believe what they're saying. And humans get shocked really easy. I realized this on Monday night when I'm talking about a football game, when the Kansas City Chiefs defeated the San Diego Chargers. And, well, it was a shocker, they say. It was a shocker that San Diego won, even though they had some of their key players out due to contract negotiations, even though the spread was only 4.5 points for San Diego, even though historically home underdogs have done very well in the history of the National Football League, and even though historically Kansas City on season openers at home have dominated for decades, we're supposed to be shocked. It doesn't take much to shock humans these days, so how shocked are humans going to be when we see gold go into 14, 15, 18, even 2, 3, 4, 5,000 per ounce? How shocked are humans going to be when silver gets up to 24, 30, 50, even triple digits and potentially quad digits? How shocked are humans going to be? I have to say, exceptionally, majorly shocked. But moving on with this article again, and it states on here, a warning from economists and a leading global think tank comes amid fresh evidence that floor low interest rates that past 2 years have induced households to borrow more than they may be able to comfortably afford. I don't know if I read that a few minutes ago, but if I didn't, well, what do you expect? What do you expect when people are in situations where they got minimum wage jobs, maybe part-time work, and the bills just get higher and higher? What do you expect them to do? Do you expect them to live their life of misery? Is that what you want? And when I say you, I mean central bankers. Is that what you want them to do? It's just it's a question I do want answered, actually. Moving on with this article. A survey says that if a Canadian were to win $1 million in some sort of lottery, that most likely they would be paying off debts instead of buying a shiny new car as the first thing that they would buy. As I've said, debts are guaranteed, whether it's a student loan, whether it's through your mortgage, or whether it's just to have food on the table. People are going in massive debt. Moving on with the article. People are worried that interest rates are going to increase because once this happens, their debt loads are going to get bigger, said Cindy Forget, chairman of the Canadian Payroll Association. And more to the point, the new survey found that 59% of employees said they were living from paycheck to paycheck, and that about half put aside only 5% or even less of net income in savings. And there's an interesting little burning question, or little poll, as they say. And, well, the question is, Canada's 5 biggest banks earned a combined $4.8 billion in third quarter profit, 9% more than the previous year, while missing expectations. Do these results make you feel good about the economic recovery? And as of about 11:45 a.m. Eastern time today, 32% said yes, 56% no, 12% were unsure. And let's just think about where they got this $4.8 billion from. Well, let's see. You know all those nuisance fees you have to pay, and there's so many of them. The monthly fees for this, the transaction fees, they all add up, and they can get pretty big. But it's not even really that. It's the interest that they are making from you, the people, your student loans, your mortgage, your car payments, even interest on your credit card so you can put food on the table. And because they are making this money, does this make you feel good about an economic recovery? To me, I want to say, okay, great. You've made this extra money. People are suffering. What are you going to do to help people with this $5 billion? Oh, I know what you're going to do. You're going to lend more money, thus charging more interest. And that's only my opinion on the situation. I was watching a business video on Fox Business today. People are wondering, well, why is gold going higher? Why? And you know what? Many people are dumbfounded to the situation, and it's not their fault. When they are not being told about the fiat currency and what this means, then what do you expect people to be doing? Yes, going in shock within the situation. And then people are saying within the media, that is, that gold's in a bubble. Everyone loves it so much. Well, here's the thing. If I were to take a 1 ounce gold coin or 1 ounce gold bar and walk around town and talk to a bunch of people and say, hey, will you give me $200 for this? How many people would actually give me $200 or say, oh, wait a second, let me go to the bank machine and get some money? How many people would do that? Yes, there would be some, because not everybody is dumbed down. And if I got the opportunity to buy a real pure 1 ounce gold coin, then I would be really, really interested at buying it for $200 and then most likely turning it around, selling it for fiat cash, and then taking that fiat cash and changing it for silver. That would be my strategy. But basically what I'm saying is people are clueless about the situation on gold, on silver, on the currencies. And it's not their fault because they tune in CNBC, they put on CNN, they put on Fox News and NBC News, they turn on their local 640 AM radio station, they put on their Bloomberg webpage articles and that from Yahoo Finance, and they are expecting to get solid, sane information. That's not going to happen within the situation. But I do notice there are more people that are waking up. But the unfortunate reason for the waking up is because of the destruction within the economy. It was very interesting hearing the people on Fox Business saying, well, the stock market at 10,500 Dow is just up so much. Yeah, it was 2 years ago. Over 2 years ago, July of 2008, and everyone was panicking because the Dow was falling all the way down to 10,700. Yeah, because we were at 6,500 Dow about a year and a half ago, 2 years ago. That's why it seems like it was up so much. And because we were at 14,000 in 2007, that's why it felt like it was down so much. But overall, when we have the stock market as flat as it has been for the last decade, when we have situations like the May 6th flash crash, or conspiracy lows as I call it, many people are losing interest within the stock market, and to me, that is a good thing that people are losing interest. But no, that's not a good thing. People should be losing interest and getting dumbed down and believing lies and gaining interest in sanity and try to figure out the best possible realistic situations they can for themselves. Thank you for watching, everybody.